Good afternoon, everyone. It's Coram and Ed Carson here with a look at the market for Wednesday, June 21st, where we saw the market pullback continue with the Nasdaq leading the sell-off. But could we still classify this, Ed, as an orderly decline?
Well, it doesn't look disorderly so far. I mean, it's been relatively gentle so far. Do want to keep an eye on it. Want to keep an eye on leading stocks like NVIDIA and AMD, see which ones hold up and which ones don't. And we also want to take a look at Chipotle, and which showed some strong action today.
All right, looking forward to taking a closer look at those three stocks. But first, let's take a look at the major indexes, starting with the Nasdaq, down 1.2% by sessions close. And before the show, we were looking at the intraday chart and talking about the renewed whoosh of selling into the close there. But all in all, a decline of 1.2% that put the Nasdaq right at its 10-day moving average. So not a surprise at all to see this pullback continue, because we aren't even down to the 21-day line yet, Ed.
Yeah, so 3 days, and this was there was a lot of actually some positive action. It was nice to see the Nasdaq underperform the other indexes. This is the one that's extended. This is the one that felt stretched and needed to come back, whereas other indexes, they weren't either that stretched or weren't stretched at all. So far, this is healthy. Obviously, you don't want to see this plummet or fall forever, but yeah, this is just to the 10-day line, still a fair amount above the 50-day.
Yeah, expected action thus far, and pretty reasonable here. Let's also take a look at the S&P 500, a mild decline here, down about 0.5% by sessions close, whereas the Dow was down 0.3%, and the Russell also bleeding into the close after holding on to a fractional gain with about 10 minutes or so into the close here, but not a whole lot of damage here either. We can also take a look at the S&P versus RSP. So keep in mind the S&P 500 down 0.5% today, RSP well off lows, down just 0.1% by the close, Ed.
Yeah, that was really nice to see, just showing that the bulk of the market really didn't show a lot of selling. And there was, at least heading into the close, NYSE winners were outpacing decliners. And even on the NASDAQ, despite that big drop, it wasn't that bad. It wasn't that bad.
And we also like comparing QQQ with QQEW. So here's a look at QQQ, the NASDAQ 100, down about 1.4% today, whereas QQEW down less than 1%. So yet again, it seems like the top heavy kind of stocks, perhaps the ones that felt a little bit more of the selling pressure today.
Yeah, and that's what we've been looking forward to seeing.
Because and we'll take a look at some here soon, but to varying degrees, even with declines, some leading stocks are still holding up okay, but it's important to look at where they are in relation to their moving averages, to their recent lows. What does the volume look like? All that good stuff. And some are looking better than others. But we want to take a look at the Dow and the Russell. So here's DIA down a little bit here today, but still above its own 21-day line. Small caps, the Russell 2000, which is tracked by the IWM ETF, down another day today, but with its second close in a row off lows, holding above that low from about mid-month. And now we want to take a look at some sector action underneath the surface. So we've been talking about sector rotation. Are we going to see more rotation into the non-tech areas of the market, Ed? Well, here's a look at XLI reversing higher on the day.
Yeah, and it'd be great if you could see a lot of these names sort of hold up right around here, around buy points, and show relative strength, that the rest of the Nasdaq comes down and lets the moving averages catch up.
Okay, and chips and software, those two leading groups, how did they take today's pullback? Well, SMH with an outsized loss here, down about 2.3%, and IGV tracking software down 1.8%. But again, if you take a look at where these sectors are in relation to how far they've come up, it's hard to find a whole lot wrong here. But we have been saying the more extended we've gotten, maybe take some profits into strength, if that's your style of trading before you start seeing some of these declines.
Yeah, and definitely we've been saying maybe not buy techs too often because it really felt like they were going to come down,
Yeah.
and but there's a lot of reason to be bullish longer term.
Yeah, such a good point. Even more important than should I lock in my big gain or should I hold on to it? Is yeah, that buy side of the equation at present. Well, speaking of tech stocks and how are they handling this pullback, a great comparison right now, Ed, is looking at two leading chip makers, Nvidia and AMD. So first, let's take a look at Nvidia, down about 1.7% today. Volume was above average, but the stock closed off lows and it's still 5%, Ed, above that 10-day line, that pink line on the chart there.
Yeah, I mean, this has had a huge move in the year. It's up still for the week. Really, closed near the highs of the day. This is barely at anything. You wouldn't say that Nvidia is in a pullback. This is really holding up well. It's early. You never know what might
Yeah.
happen, but you want to be watching leaders. Are they holding up? And as the pullback goes on, and which ones might show some new opportunities. This is just excellent.
Relative strength line still at highs. The stock holding above its gap up day low. It's low from 6-7 as well. We've got the 21-day line, the 400 level, and the 10-day line. So all of these different levels. If you really wanted to scale out of your position bit by bit, perhaps those are some lines to watch. Doesn't mean you need to sell at each of those markers, but you got to find what fits your investing personality.
Yeah, that's a great way to show about how you might scale out. That's great.
And now let's contrast this with a look at AMD. We got a downside reversal off of the high there, Ed, with this balloon volume marker, and it seems like that was sort of the first tell maybe for AMD here. It really has
Yeah.
been sliding.
Yeah, that was the day when AMD released some new chips to say, "Hey, this is what we're gonna do to compete against NVIDIA on." It was a downside reversal. First, it looked great, and then everything went badly. So 5 out of 6 days down. 4 out of those 4 of those days were on heavy volume on the downside. Yesterday it's sort of like, well, if the pullback were over, that action
Mhm.
wouldn't be the worst. It wasn't great because there was higher volume, but say, okay, it found support at the 21-day line, but the pullback has just barely gotten started. And now you can see how this is that was a really sharp sell off through the 21-day line, through the low of the recent gap up. So, it doesn't mean, look, it can bounce right back. It's done that before. It's done it this year where it looks terrible and then comes right back, like right after earnings, looked
Mhm.
terrible and then just went marched straight up. But this is what you want to be watching for. Which ones can hold up and which ones can't. Right now, AMD is not looking particularly strong among these winners
Mhm.
of late.
Right. And so, Ed, it seems like for those who maybe got in NVIDIA in an early entry in the base or even the breakout, it seems like if they weren't taking profits already, this sharp move lower with a close at the lows below that 21-day line definitely seems like an area that you would want to be locking something in.
Yeah, not just because of this, but because the market's suggesting that you'll probably see the Nasdaq continue to fall a little bit more, which makes it really difficult for a stock like AMD to hold up. So yeah, it would seem like you'd be wanting to be taking some profits by now.
hmm Yeah, and getting close to filling in that gap area there. Now let's take a look at Chipotle. So non-tech, this stock up 1.2% today. Didn't quite have above average volume by the close here, Ed. And I know we had a couple of different lines that we could have drawn here straight across sort of the bulk of this tight sideways trading area, maybe even a trend line, which it definitely crossed above today. And on a weekly chart, this stock is bouncing off of the 10-week line after going nice and tight in quiet volume with that moving average catching up.
Yeah, so that's a lot of reasons why you could have bought it. it wasn't a massive move even at the highs of the day,
Right.
but this is a place where you could take a position. It's like there's a lot of reasons. Like this was our stock of the day. This was added to swing traders, so we've been watching this for a while. The only caveat is that this is a this is a Nasdaq-led pullback, but it's still a market pullback. So, I mean, that just makes it more of a challenge. Now, maybe this is the opportunity. Maybe this is when Chipotle is going to show its strength. And if you wait till the pullback is over, this will be extended. That's hard to know, but it's just something to keep in mind that this is still, even outside of tech, is just makes it a little bit challenging, an added risk when you go for something like this.
Great thoughts there, Ed. Thanks so much, everyone, for watching. We'll be back with more tomorrow morning on IBD Live, and we hope you join us, investors.com/IBD Live, for all the details. We'll see you there, and we'll also see you right back here tomorrow at the close.